Hi, I'm Peter Rose, founder of Longwood Currency Trading. Don't try to trade the FOREX economic news reports. It could lead to big trouble. Yes, the opportunity is there to make a lot of money, but you're gambling. FOREX itself is not gambling. Gambling is when there is a mathematical certainty of loss of some type. In FOREX, that isn't the case. You are have all the opportunity in the world. There's no mathematical thing that says that you'll lose. In 7 throws of the dice, you're going to crap out or something. That's a mathematical certainty. There is nothing like that in FOREX. So FOREX isn't gambling, but trading the fundamentals, trading using technical analysis, as far as I'm concerned, and trading the economic news release numbers. You're bordering on gambling there. It's a beautiful summer day in 2025, early July, and I wanted to come out here and do my video because there's a nice breeze blowing. And the last few videos that I've done, I've been all kind of blacked out because the sun is so bright, and I'm not changing the ISO on my camera. I just that's not what I want to do. I want to talk to you guys about FOREX. But when we are interested in something, we always try to learn about it. I've been studying the FOREX market since 2007. Like I said, it's 2025 now. And the general overall financial market since the mid-1970s, late 1970s. I was writing simulations on a small computer back then. I think my first one was an Apple II Plus, programming in Pascal. And I'm interested in that stuff. In my studies of FOREX, I've done studies with economic research. I've read Soros's book. I've done systems analysis. I was a software engineer for 33 years, so I'm interested in pulling things apart and seeing how they work and trying to replicate it and build it and all that other kind of stuff. None of that is necessary to trade the FOREX market. And I guess what I try to convey to those folks that have decided that they wanted to get some training from me, whether it's taking the fast track course that I have or just some minimal consulting. The FOREX market is the most complex and difficult market in the world. And there are many reasons for that, as I'm sure you know if you've traded FOREX at all. And yet at the same time, because of my physics degree, the most complex things are made up of a whole bunch of simple things. A car is a really complex thing, but it's made up of a whole bunch of simple things. And so the FOREX market is a vast market with, at its heart, economic exchange between two countries with different currencies. That's what it's all about. So you can envision the complexity of that, not only dealing with one country. You've got the economies of two countries and the ratio that results when you interact one person's interest rate policy with another country's interest rate policy and all that other sort of stuff. So it's inordinately complex. And yet, if you know how to filter out the complexity and get to the roots of it, as I do because of my background, it really becomes quite simple. It doesn't mean that simple things are easy to solve. It makes them easier or simpler to solve because you're solving a simple problem. So when you decompose something, you decompose it into a series of smaller problems each which we call highly encapsulated in software engineering, meaning that it's just one problem. It does one thing. If you're writing an application for starting a business, one of those applications is an accounting thing that you're going to write. Part of that accounting thing is onboarding a new employee, let's say. So if you're instructed to write the employee onboarding module of that, you don't have to worry about exiting that employee. You don't have to worry about a Social Security withholdings. You don't have to worry about payroll for that employee. You don't have to, none of that stuff. You just need to get him through the door, registered as an employee. If he needs a t-shirt to wear that's specific to that job, they get him, throw him a t-shirt. If he needs a security check or whatever to start up, or medical exam, if he's going for a CDL license or something, then you do that. That's all part of the onboarding process. And so you focus just on that. That becomes a simple problem to solve. Whereas if somebody said, write this accounting package, and employee onboarding is, one of them that you have to do, along with this and along with that. Well, you'd go crazy trying to do that. So when we're looking at the Forex market, we have to decompose that. And that's what I did. And I used my software engineering background, where we have a thing called the software development lifecycle, which is a complex process that takes complex systems and shows the engineer how to break those complex systems down into smaller, less complex systems that are highly encapsulated. They're discrete, like the onboarding module. And then you have a programmer that would work on that, just do that. He knows he's going to get certain information coming into that module, so he has to check it. And he knows he's expected to spit out certain information. All the stuff that's going to register him needs to get spit out to the database. So he's got an input that's highly defined and an output that's highly defined and organized. And so you can work on that. And so that's what I used. I used the software development lifecycle to create what I call the life cycle of a currency position, because that's really the problem we're trying to solve, is that as retail traders, that's our problem. Entry analysis, position management, and exit methodology. Those are the three problems we need to solve. We don't need to solve the fucking problem of Forex economic news release items. What does that have to do with hitting bid-ask? You could say, well, if I'm going to trade the NFP, I'd want to know what characteristics I need to put into my rules in order to do that. No, you don't. Because the input that you're going to feed into your entry analysis rule is simply, the input is going to change. The rule doesn't have to change. You change the input. Maybe the input would be the expected ATR within a 45-minute period time frame on a 5-minute chart. You might want to say that the probability of the ATR hitting this, because your rule may have some condition that says, oh, when the current ATR varies off of the current long-term ATR, then you might want to look at an entry in that particular direction that the price is expanding into, right? So looking at NFP, economic news release data, is not a part of the problem that we need to solve. That's solved if you write a good rule. That's the most difficult thing I said many times when I work with a new student or somebody who's considering coming on board to take the fast track program, is I try to go over all this stuff, and unless they've listened to a lot of my videos to get the scope of the problems that we're faced with and how we break those down, they just don't relate to the fact that I'm not going to talk to them about NFP. I'm not going to talk to them about 500 to 1 leverage. I'm not going to talk to them. There's no magic pill. And they're going, well, where's this? And I see these guys doing this and this. Well, that's what those guys do. So if you want to go and learn that stuff, then you got to go to learn from them. But the question you need to ask yourself is, can they teach me how to do what they're doing? To explain what they're doing and how they're doing it is relatively simple. But if they can't tell you when, they're not going to be able to teach you anything, because that's the critical point of the solution of any problem. What do I need to know? How do I implement what I know? And when do I implement it? I want to plant a garden, so I need to know the what. I need to know what a shovel is. I need to know what the dirt is. I know what the seeds are. I need to know how to use the shovel. I need to know how to plant. I need to know how to water. I need to know what the soil composition is and how to judge that soil composition. But when do I plant the garden? If that isn't taken into consideration, I'm going to try that. I'm going to follow the recipe, but I'm going to try to plant it in the snow in the winter. It's not going to work. If you don't understand the when of a problem, you don't have a solution to it, no matter how much you know the what and how well versed you are in how. And I think that's where the failure in so many of the retail traders comes from, is that they feel that they need to know all of this information because they're not being taught that it's simple. They're being taught, oh, I'm so important, I know all this stuff, and I'm going to show you what a Bollinger Band is, and I'm going to show you this, and how to trade this, and here's a trend, and we're going to learn how to do trend following, and oh, by the way, you're going to need range bound, you need to do that. What if you want to scalp? You're going to need to do, no, you don't need to know any of that shit. What you need to know is how to write conditions that solve three simple problems: entry analysis, position management, and exit methodology. And entry analysis is the most important of them, because if you don't have a good entry, you don't have a position to manage or a position to get out of. So that simplifies it. You're not going to have any employees to your company unless you write the employee onboarding application. You don't need to write anything else. Just write the onboarding part so you get the employee in the door. So when I say don't trade the economic news reports, the FOREX economic news reports, like the non-farm payrolls or the report that just went off today, the employment figures, the jobs report. Because if you don't have a whole lot of experience, you will lose. You will be gambling. Oh, I'll just set my limit above the current price, and I'll set another limit below it, and whichever one gets hit first, that's the one that's going to go. No, that's not the case. Because if you've watched an NFP before, in a minute, that price could go 60 pips. And it could go, so you're setting your stop, 10 pips or 15 pips on either side of the entry. So it jams down in 5 seconds within opening. Boom, it jams down and catches your short. You're short. It's going down 25 pips. And you're going, this is great. In another 3 seconds, you're 30 pips up, and then it turns around and it goes 30 pips above that, and then you're going high, and it hits your buy point. So now you've lost all those pips that you made, plus you've lost another 15 or 30, but you just all over the place. You made a bet. It's not like betting on the craps table or something. You have an implied loss there. The casino knows that the best odds on the craps table is pass line craps, but it's still 1.14% against you. So in the long run, they're going to get 1.14% of your money. If you stand at the table for an hour, the dice are going to get thrown 60 times an hour. So you're betting $10 a throw. So you're betting $600. You're going to lose X amount of dollars from that. It's just implied math on gambling. But if you create a gambling environment like you would by setting your limits and stops on either side and going from there, that's gambling. You know, there was an stock options strategy that some guy was selling, I don't know, 15 years ago or something. And he did just that. You just buy out of the money calls or puts or whatever you want to do, and you set them up at a certain point, and when the price goes up, you execute, and you're good. But prices can really move radically, and take you out on both sides. So you have to be very aware of the rules of the game that you're playing, and you need to conform the rules that you write to satisfy the rules of the game. Because if you don't, in my last video talked about what are the rules of the Forex game, or maybe it's a couple of 3 videos ago, the 3 Forex rules of the game. Video, I'd encourage you to watch that video. It's one of the more, I think, key principles that you need to understand in trading Forex. This is an example of that principle of going against the rules of the game, which would be to gamble on the non-farm payroll or the jobs report or whatever that you think you're gonna scoop. Does that mean you can't trade it? No. In the fast track course that I have, I say don't trade it while we're building a foundation for you of solid rules. I don't care whether you have 2 or 3 years of experience. We're going to start over to build the foundation that you probably don't have. You don't trade the jobs report. You don't trade the news reports. You don't look at the fundamentals. You don't use technical analysis. You don't use any of that stuff. You just use the simple stuff. You know, and the hardest thing for me is to get somebody, as I was saying 10 minutes ago, is to understand that all the stuff that you know is probably 98% unneeded. It's very difficult to give that up. But once you do give it up and you have established a solid set of conditions for the rules that you have, and that's what that fast track does. It tries to bring you up to the point very quickly where you are developing those rules, because it assumes that you have 6 months to a year of basic trading experience with at least $1,000 in a live account, and that you haven't been screwing around at a 100 to 1 or 500 to 1 crazy leverage. So your expectations of success are far in excess of the fear that you should have for how much money you can lose, because it works on either side of the fence. With that experience, if you trust me, I can have you throw everything out and show you what those 3 problems are that we need to solve, and then show you the 4 or 5 things that you need to use to solve each problem. Isn't that much easier? I've solved the first problem for you, which is what are the 3 problems you're going to need to work on? Entry analysis, position management, and exit methodology. Okay, let's take entry analysis. The fast track course takes you through a scenario using all 3 of those problem domains that they call them, all 3 phases of the life cycle of a currency position. It takes you right through them and then backs up and starts over again. Here's the foundation. Here's the rule again. What kind of conditions do you think we need to put together in order to solve this rule? I'm gonna take my dog out and I'm gonna wash him. Hey, Bo, don't worry about it. Not gonna happen today. He knows. I'm gonna take my dog out today and I'm gonna give him a bath. What do I need to do? Well, I got to have a leash to leash him down with, or he's going to run because he doesn't want to have a bath. I got to have the hose out and ready to go. I got to have a couple of buckets of water, and I got to have some soap and maybe a sponge or something like that, or a rag, and I need a towel to wipe him down. Those are the things that I need. I don't need a can of oil that I'm going to change the oil in my car for next week. I don't need pillows. I don't need a hammer. I don't need any of that stuff. Maybe I'm going to need a hammer later to or fix a window or something, but I don't need it to wash my dog. And that's the most difficult thing people have to do when they work with me is to give up, let go of the complexity, and have faith that. And it's not just because I'm saying these are the key aspects that you have to know, because I'm doing personal consulting with you. I'm an educator. I've been teaching people for 50 years in the martial arts. I've taught thousands of people self-defense and karate, important stuff. This is just money. This is simple. And it's my confidence and my ability as an educator to have people do what I say they need to do, and then we come up to that entry analysis problem. Okay, let's take a look at this. What's the stuff that you need to know in order to solve this problem? You've already got some background behind you because you've traded before. So how do you take the basic information from your experience where we've highlighted, what are you going to need to do to solve this problem? Here's the problem. It's very clear. I want to wash my dog. What do you think we're going to need? Because I want you to be able to work with me in our consulting, because I don't just have a course, a PDF that you read because you're not going to get it. You don't get a college degree by reading all the books in college and then taking the test. Maybe a tenth of a percent of the people can do that. They don't need the instructor because they're just inherently bright, really bright. When I was taking my physics degree in college, we're in a thermodynamics class, which is a complicated topic in physics. And my friend is 4 seats away from me, and he's doing his English homework. And he glances up at the board, and he tells the professor, who's 60 years old and has been a PhD and worked at Los Alamos nuclear facility for doing advanced particle research. And he goes, in that equation that you wrote up on the board, this just looks like a chicken shit all over the board. You missed the exponential value here, didn't you? And oh yeah, you're right. And he erases stuff and he starts writing, and I'm writing in my notebook, shut the fuck up, quiet. There's some people that can do that. I couldn't do that. So you don't worry about that outlier stuff. The rules are made for reasonableness. Just like when we're talking about leverage. You want to trade at 500 to 1 leverage? Well, wait until you've got 3 or 4 or 5 years of experience under your, because you're going to need that. But in the beginning, when you're trying to figure this stuff out, why put that complication in at 500 to 1? Because that throws more complication in it than all of the simplicity that we've developed to build the 3 rules. It really throws things off. So in that fast track course, it's constantly throttling you back so that you understand this is the problem I got to solve. And then when you come out of the course, you don't want to trade the NFP. Why? Why bother with it? If you're making good returns on a consistent basis 3 or 4 days a week, and you have enough money in your bank, you can replace your job income. Why trade the NFP, which is jump ball gambling? Why not wait until one of the opportunities comes up that we start talking about toward the end of the course, and then is enhanced later by advanced solutions if you decide you want to take that? Well, what happens when you get that outlier move? That move that goes beyond your profit target. Now what do you do with that? Oh, there's a whole raft of cool stuff you can do, staging and building, and maybe you're going to up your leverage a little bit. Now you're compounding on the run. It becomes, because you can handle all that complexity. I traded the jobs report today. I was sitting there looking at the 1-minute chart and the 1-hour chart on the other side, seeing where price was going. We were 8 minutes to the release of the number, and I've got my hand on the button. I see where order flow is going right now. That's a setup, but I know that's going to continue to bring the folks back in, so I'm ready to go. I went in early, and my limit order was hit just before it started. The The actual report came out. People were starting to change around. And price went against me. I was 2% down at that time. That's okay, because I had a plan based on my experience. That thing turned around and dropped like a stone. I got out right away, picked off some. It did what I thought it was going to do, which was go up in the opposite direction. Once it passed a certain point in that, I hit a buy, market buy, and it went up, not very far, because I knew it was going to get plugged up with all the stuff that's going down on the short side. I popped out of there and ended that scenario. 2 trades, up I think it was 1.3% or something like that, against my risk, in about a minute. Probably less than a minute. Although I was into the trade probably 2 minutes before that opening, and I shouldn't have done that. I should have just stayed out. And that's why I went 2% against me. And it was just, there was a lot of volatility going on at the time. And I should have waited, because it could have gone very bad for me. I've done those reports. I try to trade those reports because I have no fear of loss, because I know I can make the money back or make it up or whatever. And I've lost tremendous amounts of money doing that. But I stabilize. When I follow my rules, I know what my metrics are. On a daily basis, I'm an 82% winners against the 18 to 20% losers on a daily basis over a year's period of time. I know what my win-to-loss ratio is on a daily basis. I know what the other 3 metrics are that I teach in the Fast Track program. And so when I follow those rules that I have, and the rules are based on the metrics that I have. So if you don't understand the metrics and how they integrate with it, you're going to be unsuccessful. Those of you that are listening to these people talk about risk-reward ratio, for example, how many times in my videos have I harped that that's the stupidest thing in the world that you could possibly think of? And yet the people are teaching that stuff. And you have a belief in it because it makes sense. Oh, if I can only withstand a 10 pip loss, and I'm trying to get I'm trying to get a profit out of that. I want 3 to 1. I'm going to try to get 3. I'm going to try to get. If I take a 10 pip loss, I'm going to try for a 30 pip gain. Therefore, every time I lose, if I have a good plan, I can make that up with the 30 pip wins. It's stupid. Sure, you're for sure going to lose 10 pips, but there's no guarantee you're going to make 30 when you win. So it's just stupid. So when you are looking at the education that's out there and what these people are talking about, be sure that they can convey the correct, not only are they talking about the correct stuff, the what and the how, but they also know the when, because that's the most important part. If you don't know when to do something, even if you know everything there is to know about the Forex market, you won't be successful. And knowing the when is based on the metrics that you have in your experience in trading that shows you, based on ATR, based on the metrics, based on the condition, based on whether you're on a 5-minute chart or a 4-hour chart. Those are the metrics that you're basing that trading decision on that particular time frame. And it's simple. It's very simple. If you want to chat about this, please send me an email. I'd be happy to talk with you about the simplicity of Forex trading and why I don't advise trading things like the NFP or the general economic news reports, and why you don't need to know fundamentals and macroeconomics, and why you shouldn't be using Bollinger Bands and RSI and oh my. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.